All right. Welcome to everybody who's joined. Thank you for joining. I'm Helen Calvin. I'm the Chief Growth Officer at Buildout. And as you probably know, because we say it often, Buildout's belief and mantra is that the future of commercial real estate is tech-enabled, but very specifically, it's broker-led. And so we like to bring you conversations from the actual people on the ground working in the commercial real estate space, leading their teams, leading their businesses, and leading the charge on what's coming. And today, very excited, we're going to talk to Ashley Bloom. Thanks for joining, Ashley. Ashley is a managing partner over at SVN Commercial Partners, incredibly successful brokerage, modern and changing the game on how you think about commercial real estate, and also very critically the council chairman for the National Land and Development Services product with SVN. So lots of big insight there from Ashley, and we're going to talk about what Ashley sees is coming down the pike in terms of commercial real estate, and some specific questions about what he thinks is coming from the technology space and where maybe you should be looking at introducing technology if you haven't already into how you run your business. But Ashley, everyone always introduces them better themselves. So why don't you kick us off by telling the folks here a little bit about yourself?
Sure. My name is Ashley Bloom, and I've been in the real estate space for just about 25 years. Prior to entering commercial real estate or real estate, I was a CPA. Accounting was my educational background. I worked for a company called Coopers & Lybrand, which is now PricewaterhouseCoopers, which I think is the largest accounting firm in the world. I did not do tax or audit. I was in their consulting side of the business, which I was able to see real estate and transactions. But my dad was a lifelong developer, and what started out as crunching numbers on nights and weekends turned into me becoming a developer. I still am a developer. I do have a portfolio of properties, but eventually gravitated into the brokerage and have been with the SVN brand for just about 15 years with a primary focus of land and entitlement. We have built a brokerage here in Florida. We have 5 offices and about 50 advisors across South and Southwest Florida. So that's the quick background of who I am.
You know, I think your background in development gives you a little bit of a unique perspective, or maybe just a unique approach to how you think about running your brokerage and driving business with your advisors, or just how you think the market is trending. How would you say that development background shapes your perspective on how to run your team and how to attack this market?
Great question, and it's actually my background, not only of development, but also of accounting, has led to the core of our company in that we are very data oriented. We are very methodical in not only gathering the data, but going through it, and being able to talk to clients and property owners as an owner of property, as someone who has and is currently developing property, as well as that background of accounting is a great approach. And there's a lot of comfort for property owners when they know you've been in a similar position for them. So we like to say here at my company, we treat every property as if we owned it ourselves.
What does that entail? When you're talking about the data, you're very rooted in using data to think about how to attack an asset. What are the reports that you're looking at? You're seeing it as your own property. What data do you want to see? What do you want to know?
Well, I mean, really getting complete data, right? If it's comps, making sure you've gotten all the comps. If it's land, which I have a background in, making sure we gather all the information with the permitting and entitlement. If it's trying to figure out who the other property owners are or other players in the market, it's using some of those tools to gather property owners and get the data. It's really having a full and complete understanding of your property and the facts and data that surround your property.
What are some of the trends you're seeing in that data? You're getting that complete picture on every one of these individual assets. What's the roll-up of that? I'm just curious. What are some of the things you've been seeing in these changing market headwinds?
Yeah, there's, the headwinds are important, and that's actually where, as a broker, you try to be as much of an advisor as anything. Certainly, the banks have tightened everybody down. Where we were seeing speculative building and a lot of multifamily deals being funded, the banks in these kind of times tighten down on their data and they tighten down on their assumptions. So, for instance, if you're a multifamily developer and you're looking to do a construction loan, they're not going to accept rising rents in this kind of environment. They might even have some rent retraction, or they might have some higher vacancy numbers. So having that information and those tools really does help you communicate when everybody is looking at the data a little more closely than when things are a little more frothy.
Any tips or tricks or any levers that you're using to counterbalance that when you're going to the banks and they're not going to accept what they would have accepted historically in terms of you projecting these rising rent rates? What do you use to counteract that or counterbalance to help get the deal done?
So, for instance, in the multifamily space, we subscribe to Yardi Matrix, which has great data. We will, use our ability to talk to property owners and find out what's really going on. We'll use, CoStar. We'll use all of the tools and resources to make sure we can provide as good and accurate data as we can, because the better the data, the easier the decision making.
More credible, too, right? So I think what's helpful to folks on this call, maybe there's people who are earlier stage in the market or in this profession, maybe there's those who are have been in it for a while. But one of the notable things about you is you grew the firm really quickly. I mean, in about 5 years, pretty notable success. What was the secret to that? What were the ahas you had along the way that you think made you so successful?
Great question. The aha was, investing in data, investing in tools, creating a marketing department that used tools and resources as well. I think what's attractive about our company is we like to tell people when we're recruiting, and we are very technology forward. Having the systems like Buildout to be able to have a pipeline or to be able to track your deals. We do a lot of coaching of our younger advisors through those tools and resources. So creating that infrastructure and that philosophy of technology really allowed a lot of people in a short period of time to come on board, but get up to speed and be able to use these tools and resources to start creating their own business and their own listings.
When you talk about bringing on that technology, it sounds great. Surely there were moments where you had pushback, or maybe you had advisors who didn't really want to adopt the technology. I mean, it wasn't an easy road probably to get that all in place, good in theory, but tough in practice. What were some of the hurdles you hit in trying to be this technology forward, business, and how did you get past them?
It is a commitment, right? There's a lot of upfront time when you invest in technology. Learning how to use it can be scary. So that's always a hurdle, especially for some of our older advisors who are, didn't grow up in the world that some of the younger advisors do. So, getting the commitment to use it is number one. Number two, the idea that you have to commit so much time a week to use it so it can be a tool. So it's the commitment in bigger philosophy to do it, and then it's the commitment to do it on an ongoing basis. But the real big hurdle is getting started. Once you build it into your day, and once you build it into how you're approaching your commercial real estate business, it just becomes a part of what you do every day. But it does take commitment.
And that, old adage of sometimes you kind of have to slow down to go faster.
Exactly.
Take the time to build it in, and then you'll see the efficiencies afterwards, but it's making that commitment up front. That makes sense. So one of the things I think is great, particularly about, everyone we've met on the SVN side, and I know you've been with them for 15 years, real entrepreneurial spirit. And I happen to think that way, and a lot of Buildout thinks that way. It's very tinkering, it's very trying a lot of new things. And, we often say, better to say never again than I wish I had. So certainly while you're on this speedy rise, you were doing all this technology and maybe even outside of technology, I have a feeling some things went wrong. What are the things that you look back in hindsight and you say, gosh, that was a failure? With hindsight being 2020, I would have done these things differently.
No, good. Another good question. We do invest in certain tools and resources, and people don't use them. So we do have the certain tools that aren't used. Also, trying to be too much into technology and too much into creating the different marketing pieces for people. We got ourselves into a situation where we had so many different things going on. It actually became overwhelming, both in terms of tools and data that we had, but also in some of our systems and procedures. So about a year ago, we kind of stopped the train, and we kind of scaled it back and simplified things. So sometimes, I guess the answer is sometimes you can get too complicated and you create some inefficiency, as opposed to sometimes simple is the better way to go.
We actually did, Buildout did a big analysis and a big report, and if anybody wants to look it up, I'm sure it's on our website, which we talk about your tech appetite and helping companies think through where you are in your tech maturity, and specifically where you are in your tech maturity at different parts of the deal cycle. So where you are in your data versus maybe where you are in your prospecting tools or your marketing tools or your CRM or your data management, where you are in your deal processing tools, and understanding how much technology is the right level of technology for you, considering where you currently are and what your capabilities are. So if something Ashley just said struck a chord with you, we don't want to bite off more than we can chew from a technology perspective. I encourage you to download that. It's a free resource to help you think through how much technology is the right amount for you. We'll get back to technology in a second, but I actually want to touch on, just deep dive one more thing. When you were building, what were you looking for in terms of the talent and the advisors that you wanted on your team? What were some of the skill sets of the criteria you were looking for? And has that changed as this market has changed and has gotten harder? Are you looking for something different out of kind of the best brokers?
What we look for, ideally, is somebody with a track record and somebody that is technology forward, who is encouraged by the tools and resources that we offer and our approach, to serving our clients. What we have found, is sometimes those are two people. You might have someone who's very experienced in the industry, a lot of deal experience, but not technology forward. We have done a really good job of matching people together. So we have, certain senior advisors that have been in the industry 20 years, partnered up with young people right out of college, who use the tool and resources, and it's really cool to watch them together, because when they melt together properly, they become even better than they were, especially for the senior advisor who can look to grow their practice. So, having that efficiency of the technology side of this, especially when you can bring on a newer to the business person who their skill set really is their ability to use these tools, and allow that senior advisor to then go out and do what they do best, which is create opportunities and use their track record to get business, has been a really good recipe for us.
It's a very interesting model, pairing that up, because they can be difficult skill sets or assets to find in one person. So you're kind of thinking through, how do we partner these two kinds together? That's interesting. So let's talk a little bit. You have been, and one of your keys to success is how modern you are with technology. I'm going to say the word that's on, or I guess the acronym that's on everybody's lips, AI. We get asked constantly about it, and we actually did a webinar last week where over 40% of attendees said, I want to know what we should be thinking about with AI. What's your perspective? What does that even mean to you? How should commercial real estate firms be thinking about the benefit of it, and any risks that you see in how AI could change the market?
Yeah, I mean, we're preaching in our company, use it as a time saver or an efficiency tool. We are working on how can we speed up the databasing and research part of commercial real estate. That can take quite a bit of time to not only to gather the information, to scrub the information to make sure that it's good and accurate, get it into your CRM system before you can actually start making calls and having conversations. So, by using AI to shorten that process to, instead of weeks, into, I think in the future, seconds or minutes, is going to allow every advisor the ability to do what makes them money, which brings in business, which is to have phone calls, conversations, meetings. Some of the other tools that are built into AI that, again, if it helps you write an email or it helps you write some market information to help speed up your proposal or your brochure standpoint, I think is also another great tool. The risk, it's still AI, and we advise our people, don't just create a demographic background or write up on an area and not read it, right? Because you still want to make sure the quality of what's going into that is good, but I think it can save a lot of time right now. I also think, as it develops, and some of the things we're looking at is some of the analytics and the metrics that we can help our clients use so they can better understand their business. I do believe in the very short term, AI will help us become better with analytics and metrics because of the speed at which it can operate.
We're very much aligned in that perspective, and I'm glad that you mentioned it, Ashley, because you made a really good point just about, we call them non-revenue generating activities.
Absolutely.
And the truth is, so much of someone's day who's trying to be an advisor or broker in commercial real estate can get taken up by all these tasks and activities, which are foundational to the revenue generating activities, but they're not revenue generating themselves. And so how do you think about using AI, or better, finding vendors who have figured out how to optimize AI for you to shrink the time you're spending on the non-revenue generating stuff, open up the time for the revenue generating stuff. And I think there's that efficiency element, and the data part couldn't be more true. In the last, better part of a decade, we've seen the availability of data in commercial real estate increase, both through paid sources and also just your ability to capture it in your own business. But what we haven't seen yet is the capability or the ability to translate it into the so what. The what is helpful, but it's the so what. What does this data mean? What conclusions does it allow me to draw? How can I actually take action on it? That AI will, I think, speed up some of the processing on. Now, on the risk front, because we have a lot of customers and folks in the industry say, does AI threaten my role as a broker, as an advisor? Is AI going to come and replace us all? What's your perspective there?
I don't think so. I think residential real estate is probably more at risk than commercial real estate. Commercial real estate is definitely still a relationship business. It definitely still requires experience. The role of a broker in helping to not only negotiate price, to have the data that somebody needs to make a decision, but also to help work through the terms and conditions of a deal, or something that AI isn't still going to be able to do, which is to go and actually look at the property and understand that maybe it's a signaled interchange which has better access, so that property may be way more valuable than the property that doesn't. So I think as long as relationships, which I don't think will ever change in the near term, are out there and track record matters, I don't see the commercial real estate market being impacted in the sense that a broker won't be needed. Again, as I mentioned before, I think a smart broker will use it to help speed up what they do.
Right, and free up more time for that only human, element of relationship building, that market expertise and asset type expertise. And I think a point you've made to me before, which I think is critical, which you kind of alluded to there, is that negotiation. The negotiation is such, it's not just variables and levers. I mean, it's really a behavioral negotiation with the other party. How do you think about negotiation in this role?
In the AI space, again, it's a tool to help give information. When we're negotiating between two parties, we very often just try to make it, here's what the information says, here's what's reasonable, here's what we've done in the past. That's one we use all the time, where we might be stuck, in the situation. Take a seller default provision. We just had an advisor in my group, have an issue with a seller default provision, and having that experience and background to learn how you've done it in the past, so you can make that suggestion to your buyer and seller now. There generally is a lot of comfort when you make a suggestion and you've seen it work in the past, and I just don't see AI having that ability in the near term to bring that level of service or aspect to the negotiation process.
I think that's an interesting point to highlight, because you talk about the difference between the risk in commercial versus residential. And one of the elements of commercial is, frankly, just the repeat nature of transactions and repeat nature in the same market or in the same asset type. And so the relationships become critical, that repeat negotiation becomes critical, and maybe AI is the element that helps you aggregate or frankly just recall that pattern recognition of what you've done before. But AI isn't going to be on the front lines and then helping you do it again. But it helps at least pull forward that past experience and let you use it. Interesting. Okay.
Yeah,
no, please go ahead.
Yeah, I was just going to add, we like to use the term, we're a trusted advisor, and that does come with, experience and, familiarity with our clients. And again, I think every advisor should be using AI. If you're not, if you can get anything from this conversation, you ought to think how you can incorporate it into your own personal practice in the coming year.
Right, and I from Buildout's part, we've been talking a lot. People come and they say, well, how do I figure out how to use AI? I need to be figuring out how to use AI. And we would just say, piece one, don't spend your time trying to figure out how to use AI. Spend your time finding the right partners who can do that technology piece for you, and you can just leverage how they've curated that to commercial real estate. However, be wary of the vendors who are checking the box, using the trends term AI, but they're not actually doing anything with it. And AI can mean a lot of things, everything from machine learning to natural language processing to a lot of different elements. So be working with the vendors who you think are not just, using the term because it's cliche right now and actually figuring out how it can be helpful to your business. I will say right here, we're getting asked a lot, so what is Buildout doing with AI? We've been doing a lot of thoughtful development on that front, and we'll be releasing some of the new feature sets that are going to be available as early as January. So stick with us for a month. My marketing team says I have to lock my lips, but I'm pretty excited about what's coming there. So let's switch that gear for just 1 second and touch on that. You are actually a Buildout customer. You talk a lot about how you're using technology to kind of advance your business. How do you use Buildout?
I think the number one way, kind of from a back office or administrative purpose, we use, the pipeline feature very much to help understand, not only on a one-on-one basis when we're coaching a younger advisor or even sitting with some of our senior advisors, but also it helps you if you are an owner or managing director, when you can see the roll-up of all your advisors. We use that pipeline very much as a coaching and forecasting tool, so that we can apply the percentages and understand. You may have millions of dollars of potential GCI, but we really do focus on that probable GCI so that we can have a realistic expectation, not only for our company, but for each individual advisor. We also use the different buckets of those pipeline to help our advisors with a planning tool and the tasks and the notes and so on, with the CRM part of it. So, having Buildout be a basis for your properties, for your listings, for your marketing, and for your back office, really allows you one place to understand and manage your own business.
I think another piece of the growth path too, Buildout and just technology in general, helping, frankly, the speed to production on new hires. That you're bringing in a new advisor, that's a big expense for you, and it's great to recruit in new talent, but you want them producing as quickly as possible. How do you think about technology's role and Buildout, but technology at large's role in getting new team members producing quickly?
I mean, it's the same thing we just discussed. By getting people on the phone, by getting people to understand their markets. One of the things we try with young advisors, and it's amazing, how far real estate's come in my 25 years. It's amazing to watch how fast a young or new to the business advisor can learn what things lease for, what things sell for, and become a understanding or expert in a market. When I started in real estate, if you wanted to understand what a property sold for, even the property appraiser sites weren't online. You'd have to go down to the courthouse and pull the deed or the record. And so think about how much time that took to understand what comps were and what data was. And believe it or not, people didn't tell you the truth as to what they paid or what they sold for. So, the idea of, from understanding your markets in terms of values and valuations to not spending that time, as we discussed earlier, in doing data entry or data input, to me is just a dramatic difference. And even it was 5 or 10 years ago.
That's it almost is thinking about technology not just as a differentiator in doing all kinds of new things. It's more just how do you do the baseline of what you used to do as a business at a capacity and a rate that you've never been able to achieve historically? And how do you think about technology is becoming less of a and then differentiator. It's kind of almost becoming table stakes in the way that people operate. How do you think about, we've talked a lot about technology on the data side, we've talked about AI, we've talked about some of your back office and infrastructure tools. How do you think about the change in technology on the social media front? How are you coaching your advisors to think about the use of social media?
I mean, it's a must do, I believe, as part of your practice, and it's the same thing using your time blocking to commit to doing that. I mean, getting out there, whether it's LinkedIn or Instagram or any of the other channels, Twitter, that are out there. It is a free way to get in front of potential clients, the brokerage community, to let them know not only what you have to sell, excuse me. We use it in our company, and we really preach a lot to our people to use it as a track record vehicle, right? I mean, people like to do business with people that they think have experience and are successful. So we really try to tell our advisors, don't be so focused on just listed or even just sold on that one property. Put out informations, whether it's writing something or whether it's, this is my 10th transaction in this market. That has a lot more power to me than I have this new listing, or I sold this one property. So again, we really preach to have a consistent flow so that you can become known as someone who is a resource or an expert in your particular asset class or geography, or both.
We talked to another broker a couple of weeks ago, Lance, who's brilliant and lovely, also a member of the SVN family. And he really did talk about you never know where the next deal is going to come from and what crumbs you've left along the way that will pick up into something. So that consistent production of insights and thought leadership, or just advice on your market or your market segment, you never know. It could be one engagement that then 6 months down the line has somebody reach out to you when the timing is right for them to make a move on a transaction. Let's talk one more second about those different platforms, though. You mentioned LinkedIn, Instagram, X, our friend formerly known as Twitter. What do you think of as the use case for each of those platforms? Because it's different, maybe what you want to be doing on the different platforms.
Absolutely. I mean, I think LinkedIn, when we meet someone or we're about to meet someone, where we're checking for their background is on LinkedIn. So, being on there yourself so that, that you have the right profile and the right backgrounds, because people are going to look at who you are and check you out more than even a Google search. We a lot of cases go to LinkedIn before we go to Google. So I think if you're going to be in the commercial real estate space, you really do need to be in LinkedIn. That doesn't mean you don't advertise and don't run your properties. A lot of times there's some great articles, so that you can gain background or industry knowledge. So I think that's where LinkedIn is good. Instagram, I feel, is more of a branding situation where it's more graphics and more pictures, but again, that constant reinforcement of your company, your brand, your asset class, your track record. It's an easy way to keep that going. And I do believe Twitter, we had a guest speaker in my company a few weeks ago, a very successful social media broker, and she talked very much about how there's a great clientele on Twitter. So, to expand your presence on that, to actually find property owners that may be small to medium size. Some of the biggest corporations aren't going to be, scanning X to find it, but I do believe some of the smaller and mid-sized property owners are on there. So I think those are the three channels and how we use them.
And we've seen as a forthcoming trend in the last decade too has been this fragmentation of the investor pool. It used to be a lot of consolidated larger groups, and now frankly it's the dentist down the street. And how are you going to find and engage with those property owners when they aren't just the sort of big names anymore? And I think you're right. I think X and in LinkedIn and some of those platforms are good for that. And we talked about, Instagram seems to be the visual spot. Instagram is where you're really capturing people on the visual front. I know you have a very you really believe in investing in that visual side. So talk to us about media. How do you think about your photos and your drone videos, but also you do a lot of land and development. How do you think about renderings and aerial maps? Where does media play a role in your business?
So really, there's two components of it. When you're working on an assignment, especially in the land space, the building isn't built yet, right? So a lot of people don't look at a set of plans and envision what's going to be there. So, creating that visual, whether it's for a potential user or buyer, or, a lot of times they can be used, when you're trying to help a client gain an entitlement, right? You're presenting to a commission that, wants to see what they're going to approve. So by having the right, media, the right visual components to that, may be the difference between getting an approval or not getting approval. And, finally, and I think a lot of people may not think about this part of it, but the credibility factor of who you are, so that when you're pitching on the next assignment, when people see a really high quality marketing package and visuals and 3D, it does help you gain more business. So you may be doing the math on what you're going to earn on that assignment, but I do believe you have to think of it as an investment into your practice as well.
Right. Try not to think about the return just on the earnings or the commission on this one listing or this one property, but how are you building now a portfolio that allows you to win the next? Do you think as we talk about what's table stakes, and really the use of technology is becoming table stakes, and there's a new market that has emerged, particularly with how tough the market is right now. Do you think the level or the expectation of the visualization of a property or listing has just kind of gone up? Is the baseline higher than it used to be? That maybe even you used to spend on only your marquee listings or your big properties, but do you kind of have to spend on all of them now?
I think so. We're in a very competitive business, and the kind of proposals, the kind of offering memorandums you put out are going to compete against your competitors. And if you want to build a reputation in a very competitive market, especially when it's more difficult to get business in a tougher market, I think the bar has been raised. But we like to pride ourselves in doing that in a good market, a bad market, or a middle of the road market. It does say something about who you are, how you care about your practice. And while I do think the bar has been raised, we really do take a lot of pride in trying to have high quality in what we put out.
One theme I'm hearing from you, Ashley, is this pride in what you're trying to build, both for your clients and wanting to get the kind of team, the kind of advisors who take that level of credibility, quality, both from data and visuals, every element that you can kind of have an expectation of integrity in what you do, which I think is unfortunately quite refreshing to hear. So one more piece on that thread. We have a thesis too, when you say we're doing this in a bad market, a good market, in any market. We kind of anticipate when the interest rates maybe ease a little bit, and everybody has a guesstimate of when that's going to happen. I'm putting my money on, September, whatever. When they ease, we're going to maybe enter another opportunity for a bull market. But what's going to be so important is how flat-footed you are as a firm and as a brokerage when that happens. If you've been really pulling down your spending, if you haven't been optimizing your technology, if you haven't been building that portfolio of good marketing, are you going to be slow out of the gates? And are those next to you going to be able to really attack the market as soon as it starts to let up? Does that enter your mind state at all, or how do you think about being ready the second that this market maybe turns the corner?
No, I think you have to be ready when a market turns the corner, and that is continue to use your tools, right? If you're pulling comps, just because you maybe slow down on your transaction, continue to pull your comps so that you know what's going on in the market. Continue to put out your social media so that your database is still getting messages from you. Send them an article you might find interesting. We talked about that in a sales meeting this week, right? You have a really interesting article that things are easing up and the banks are lending again. Send that with an email to your top 200 clients, and continue to add your database by going to network events. This is a practice. I'm actually a bit of a yogi, so I consider it a practice. No different than commercial real estate. So the idea that you don't just practice when it's hot, the markets, you're continuing to do the same things. Eventually, that will pay off when the world turns to a little bit more of a tailwind.
And you have that muscle memory when you get there. Not to continue the athletic yogi analogy, but you'll have that built and ready to go, and you'll already have the way that you're scheduling the day, the way you're scheduling your time. Okay, let's talk a little bit higher level. We've talked kind of in specifics, but at the highest level, how has the industry fundamentally changed over the last 5 years, and what are your predictions? What's going to be different as we go into 2024 and beyond?
So I think in the last 5 years, for those of us who were around in the Great Recession, we saw, that's back in 08, 09, and in 2010. I
was running retail at that time, so you hit right into my scar tissue.
Yeah, I mean, for those of us who lived through all that, we saw a lot of really reckless investing. I mean, the national home builders who were selling homes to people with $1,000 down who were buying 20 and 30 spec homes. So, to see a lot of the really reckless and careless decisions, and I was still, younger in my career, and saw some very experienced people make some very interesting decisions. And so what I've seen happen in the last 5 years is, while prices have definitely gone up, the pandemic was a really interesting catalyst here in Florida. I mean, prices went crazy here in Florida after it. But really what I've seen in the last 5 years is discipline. We've seen the discipline, and I do relate that to the better accessibility to data and information. So, if you're having that information, you're going to make better decisions. So I think the speed in which we've talked a lot about it on this session, the speed in which you can access data and the approach to making sure you are using those tools is really, to me, the biggest game changer in the last 5 years. And as I've also mentioned, it's allowed younger advisors to become experts a lot quicker if they really commit to it. Where do I see it going? I do think AI is going to be a part of our world as we spend some time here. And I do think that, as you mentioned, whether it's through an assistant or through a tool that you can acquire or subscribe to, I think that in order to be able to compete with the people that are going after the same listings you're going to go after, you're going to need to learn how to utilize those tools in some manner in your business, in the near future.
So many threads on this conversation. I mean, I'm hearing from you really great advice. So much of the growth of your firm really credited to how you thought about technology, using technology to get people into be advisors and producing quickly, using technology as a way to aggregate data so that you were bringing really actionable things to the forefront, but being thoughtful about, as I talked about, your tech appetite. You made the mistakes about maybe bringing too much on, so making sure you're bringing on the right things for your business. I love this idea of partnering your teams together maybe looking at your portfolio of advisors and saying, okay, these people have huge networks or massive experience in the space, but these are better at technology. Let me see how I can partner them together. And then AI, it's an efficiency tool, but it's really a focus tool. How you're using it to make sure you're spending time on the most revenue generating activities, and the thing that only you as an advisor can do. Really great themes. To close this out, Ashley, what is your key piece of advice? I am a new broker starting out, and you're such an unassuming guy for how incredibly successful you are. So I know it's hard for you to kind of self-promote, but what would you tell a young broker? This is the key. Pay attention to this, and you'll do well.
No, it's a great closing piece. We're very interactive with our young advisors. The other managing partners and myself, we are very interactive with our people, and the number one thing we try to tell them is have encyclopedic knowledge of what you want to become an expert in. And as new people come in, and if you're new to the business, maybe taking a turn in multiple segments, right? Maybe you do a little leasing, maybe you do a little retail, maybe you do industrial. Find something you're passionate about, find something that you like. I have learned a long time ago, successful people truly love what they're doing every day, or a lot of them do. So get that encyclopedic knowledge, find that lane you want to participate in, but also take the time to look at your own practice, whether it's time blocking, whether it's the use of the tools, the CRM system, whether it's going in and spending a half an hour on a Sunday so that you're not figuring it out Monday morning. Really commit to immerse yourself in this industry. And that means going to networking groups. It means knowing who your public officials are, knowing who your property owners are. It's amazing, the young advisors in our company who have really excelled. It's amazing how fast they know what's going on when they commit to do it. And it does take time in commercial real estate, just even the life cycle of a contract to close. But if you put your head down and you continue to do the right things for your client, the right, operate under the right playbook, very rarely have I seen somebody not build themselves into a successful career in this industry.
Such words of wisdom. You can tell that you're a lifelong learner, and also that this background on the accounting and financial side and development gives you such a perspective on how important expertise is. I think this was a great session. I hope it was helpful to everyone who joined us. I know I'm going to re-listen and watch some things and relearn some of the great tidbits that Ashley shared. If you want to re-listen, we will be sending out a recording of this so you can go back and get all of these golden nuggets of advice. Thank you so much for joining, Ashley. Thank you to everyone who was able to attend. More to come from Buildout, but we really appreciate your time. Have a great rest of your day.